Who doesn't love some good insider tips, especially when it's going to save you money? If you're looking to refinance, or if you just want to understand what this refinance thing is all about, you're in the right place. Today, I'm going to give you 3 insider tips that is going to save you money when it comes to refinancing. But first, before we get started, to be compliant, let me introduce myself. My name is Linda Shinpaul. I'm a licensed loan originator powered by Edge Home Finance Corporation, and we are the #1 national mortgage brokerage company in the United States. So, refinancing your mortgage. We're going to talk about 3 essential tips. These are the very most important things I could think of after 23 years in the industry to share with you. And they are your credit score, market trends, and closing cost. Once you understand these 3 things in a little more detail, you're going to have a much better refinance experience. All right, tip 1, your credit score. The most important thing for you to know about your credit score is that it directly impacts your interest rate. Directly. In the background of my job, we have this grid, and at the top is your credit score, and at the side is the loan to value. So how much you're borrowing against that house. And when those 2 things intersect, kind of like when you're playing Battleship, like E7, and then you come down, and if there's a boat there, you have to tell them that they hit or sunk your battleship. Same thing. When I find your credit score, when I find your loan to value, where those things intersect, that is the adjustment I have to make to the interest rate for you. So your credit score directly impacts rate. And on your credit report, every monthly minimum payment counts against you. So this is important because you want to have a lower debt to income ratio, so then you can get more of a mortgage when the time comes. If you have lots of department store cards because you've got a 12-month same as cash or 10% off on your purchase, all of those teeny tiny little payments, if you don't have them paid off, will be counted against you every month. So that's important for you to know. And then I get asked all the time, Linda, can you refinance with bad credit? Well, the answer is yes, we probably could, but you don't want to. You want that score to be as high as possible. You don't want to have poor credit or bad credit. Normal credit's okay, but if we could get you to have really good credit, we go back to tip number 1, right? It will directly impact your rate. You want to have the very best credit score you can, and here's some tips on how to do that. All right. There are 5 key factors that affect your credit score. Your payment history impacts it the most. And quite frankly, all this means is, are you paying your bills on time? Okay, that's what we want to know. We also want to know how much debt you're utilizing versus what you have available to you. This is 30%. It's the second most important part. So if you have a $10,000 limit on a credit card, what we do not want to see is we don't want to see you maxing that credit card out all the time. So if you're constantly charging $10,000 on that $10,000 line of credit, it's going to hold your score down. Now, if you only charge $2,000 or $3,000 a month on that $10,000 credit card, now your debt utilization ratio is lower. You're only using 20 or 30% of what's available to you instead of maxing it out and using 100% of what's available to you. So when we talk about the amount of debt on your credit report, we're really talking about the amount of debt that you're utilizing compared to the amount of debt that you have available to you. Now, the other 3 things, the length of credit history, the credit mix, and the new credit, a lot of that you can't control, right? Because if you need a car loan, you need a car loan. If you've got some credit cards and you're using those regularly, so you have a good payment history and a low debt utilization, and you're building a great credit score, then these other things just kind of are byproducts of the type of credit that you need. But specifically, length of credit history, you want to have a longer length of credit history. So we don't want to see you opening and closing accounts. And that kind of goes back to what I've talked about on the last slide about all those department store cards, 10% down, 12 months, same as cash, things like that. So if you can help it, just get have the debt that you need, but keep it open for a long time. Once you start with some credit cards, just hang out, keep them, and let that longevity boost your credit score. Okay. Now, there are some ways you can increase your score quick. And I'm going to give you a few tips here. When you look at your payment history, you may see some mistakes on your credit report, right? And by fixing those, And fixing those mistakes is the easiest way to increase your credit score. But you have to catch them. You have to be proactive. So what you want to do, though, is have that debt removed. And the best way, the most effective way, is to pick up the phone and call. Well, I guess our phones are like this now, right? But pick up the phone, call the creditors, or contact the credit agencies. What that looks like is, let's say there's a late car payment on your credit report and you're like, I didn't do that. Like, I've been on time. I have it set on auto bill pay. This has to be a mistake. So you call up the bank that has your you call up the bank that has your car loan, and you just simply say, hey, I noticed that you are reporting me as late on my car payment from last month, but I know that I make it on time. Could you please double check that and help me fix this? So just really simple, right? And then they pull it up, and most of the time they'll go, oh my gosh, I have no idea how that happened. Or we had a glitch in our system. I told you I've been doing this 23 years. I've had handful of car loans over those years personally. And I can tell you this stuff just happens. It just happens. It's happened to me, happens to my clients. Every week I'm helping somebody fix a mistake. So it's really that easy. And then you just say, hey, would you please correct that and remove it from my credit bureau or my credit history? And they will. So that's great. And if you have issues, you can actually go to the credit agencies directly and dispute things. So it's Experian, TransUnion, and Equifax. Those are the 3 credit bureaus. And hopefully you don't have to get to that point. And if you do, you should reach out to me. There's a link in my description for 15 minutes on my calendar. Just connect with me quickly. Let's talk about it, and I'll put you in the right direction. But you can access a free credit report every year at www.annualcreditreport.com. That was set up by the government. So if you don't have any other way to see what's going on with your credit report, go there, pull a report every year, and make sure there aren't any mistakes. All right. The other things that can really hurt your credit score in the payment history section are late payments and collections. So let's break those down. If you are late, like on purpose, right? It just happens sometimes. Well, it could be on accident, but you really were late. It wasn't a glitch somewhere. Call the creditor. Just call them and ask them, hey, or the conversation would go something like this. I missed a payment last month, and you may tell them why, you may not. I didn't mean to, and I just realized it. And so I would like to make that payment immediately, and I'll go ahead and make the next payment too in good faith. And would you please remove that late off of my credit report? You guys, this happened to me about 20 years ago. My husband and I owned about a dozen rental properties at the time, and they were long-term rentals. This was kind of before the VRBO craze. But I had an assistant in my mortgage company, and she was also kind of my bookkeeper as well. So I had turned some of that over to her. Well, I went in on a Saturday morning to grab something out of the filing cabinet. I know I'm dating myself here, but yeah, I was in the paper age and I'm in the digital age. As I was pulling something out of that file, the mortgage payment statements were in that file. She had had multiple files open on her desk sometime in the week or two before, and stuff from the mortgage bill pay file got put in like the mortgage company work file. Not good. Not good at all. And so I had this like panic moment because I was like, oh my gosh. And then something else had been happening at my house. Again, I'm going to date myself. I can't believe I'm telling you this story, but we had a landline and we had a voicemail, right? Like we had the machine. And when I was getting these really weird automated messages, and I realized those were the banks calling my house, telling me that I was late, 30 days late on these mortgages. It wasn't just one, and it wasn't with just one company. Like it was 3 or 4 of them that got confused in the filing system. So I had to wait till Monday to make these phone calls, but I called all of the banks and I just said, hey, the mortgage payment statement got misfiled. I found it on Saturday when I was doing something else, and I want to pay you now. I'm going to go ahead and make next month's payment. And would you please remove those late payments off my credit report? Because I'm telling you, a late mortgage payment is a kiss of death. It's way worse than a late credit card payment. It is a kiss of death, especially if you want to get another mortgage sometimes. So it all worked out. There was a happy ending to it. So I'm telling you, like, I have made these mistakes, or these mistakes have been made in my world, and I can help you with this if you have something more complicated, but it really can be this simple. Okay. So call them, be nice, and ask them to remove the payment. Now for collections, you're going to need to call the creditor that has the collection right now. Okay. So if it was with a doctor's office, but now a collection company owns that collection, you need to call the collection company. And I would always ask them, hey, I'd like to settle this with you. Maybe it's a $500 doctor collection. I don't have $500. I've got about $350 right now, and I'd love to get this taken care of with you. And they may accept that, right? Or you could ask them, would you settle for a lesser amount? And then they may hit the little buttons on their computer and tell you. But again, this is like, kind of might sound like a broken record, but you want to ask them, I'm going to give you a lesser amount, but will you consider it paid in full and remove it? These are the most important words, right? And remove it from my credit report. And honestly, guys, the goal of a collection company is to get paid. And a lot of times they will remove it. Okay. So those are some really easy tricks that you can, after this video, just go put into play and increase your credit score. Finally, credit monitoring. I get asked by people every week, is it a good idea? Or I have Credit Karma, or I have whatever the other brands are called. It is a good idea. However, most of your credit card companies offer this. Every credit card that I have, it tells me when my score moves or there's been an inquiry or something like that. Now, I will tell you that this is great for monitoring whether your score goes up or down, but it's not precise. Okay, the scoring model that they use in these monitoring systems is not the same that we use when we pull your credit for a mortgage. So if you think you have a 640 because of your monitoring system and I tell you you have a 620, don't get mad at me. It's just the system and it's the math in the background. But sometimes it works in your favor. You might think you have a 640 and I tell you you have a 660. But it typically is not going to be the same score. But it's a good idea. Keep your finger on the pulse. Okay, tip 2. I want you to stay up to date with market trends. You do not need to become a news junkie. You don't need the TV on 24/7. I don't even need you to go get a subscription to the Wall Street Journal. That's not what I'm talking about. But if you look at this graph that I just put on the page, you can just do some simple searches or just tune into the news from time to time and just follow what's going on in the world. What's going on with housing and housing prices generally? What are interest rates doing generally, right? What's the condition of our economy generally? You can see here that, I've got to put my glasses on so I can see this a little bit, but you can see here that over the last 30 years, the average mortgage rate has been around 7.73%. That's pretty amazing. We have seen mortgage rates up to like 18%, and we've seen them down in the 2s and 3s. I started my career in 2001, and boy, what a nice time to start a career in the very best time in the history of the world, right? Rates were just going, rates were already fine, and then they just went down and down and down and down and down until recently. But so that's the cycle that I have seen and lived through. But this is important for a couple reasons. Generally, let's bring it back to refinancing, okay? Generally, you want to understand what rates are doing. Because if you think you may need to refinance, if we're in an upward trend of interest rate movement, so rates are going up steadily, you might want to make a decision sooner than later, right? If it's Monday, you might want to decide by the end of the week, right? By Friday, you may want to have met with myself or your mortgage broker and, make a decision. Conversely, if rates are trending downwards, maybe you can put it off till next week and we just meet next week when it's more convenient for you. And if you just make up your mind in the next couple weeks, that would be fine. But again, generally, which direction are rates going? What is your equity position? Probably every 6 months or once a year, you need to understand how much the home you own is worth. And there's lots of ways you can do that. I think calling your real estate agent is the very best and most reliable way, but there's lots of ways you can find that. But basically, you want to say, this is what my house would be worth today if I sold it, but here's what I owe on my mortgage. And then the difference in between is the equity that you have. And if you needed to refinance, that is the money that we would then be talking about accessing. Okay. What are consumer debt rates doing? Unfortunately, Most of us have a point in our life where we carry some sort of consumer debt that we didn't think we'd ever carry. And what I mean is credit card debt, right? Or a car loan or an RV loan or a personal note. But specifically, let's talk about those credit cards. And so we have just come out of a phase where it's not uncommon for your credit card to be over 30% interest rate. That's a lot of interest. And so understanding what's going on there in the fine print, and then having that general understanding of where rates are on the mortgage front and how much equity you have, when we combine those three pieces, it may make sense for you to have a conversation with me about refinancing. But listen, I don't have a magic crystal ball, and I don't want you to get overwhelmed that you have to do all this research. I want you just to assess your current situation, right? What's going on in your world right now? What is a solution that would make all the difference to you right now? And then we look at where rates are, and we look at your equity position today. We look at whatever that consumer debt is doing today and make a decision, and not try to hedge the market, right? We want to have an understanding, but we want to really stay focused on your current situation and just get you in a better place. Finally, I really want to encourage you to work with a mortgage broker, and here's why. Mortgage brokers have the ability to shop your loan across dozens and dozens of companies. And so we will do that legwork and that shopping for you, versus you having to go to all these different online lenders and make application. The other thing that typically happens is that when you go online and make all of those applications, a lot of times you might get an email, you might get a text, but you're very rarely going to get a phone call and build a relationship with the loan officer. And in the mortgage brokerage world, that tends to happen way more. And it certainly happens if you make time to connect with me and we ended up working together. So, all right, tip 3, closing cost. When you refinance, it's not free, okay? However, I am a proponent of refinancing, and there are so many times when it makes sense, but I just want you to know this. There are fees. There are lender fees. A lot of times there's a credit report pulled. Most of the time we need another appraisal. There's title insurance. Depending what state and county you live in, you may have doc stamps, all of these different things. And we will set up an escrow account again. And what I mean by that is the lender will collect for your taxes and insurance every month when you make a payment, so they can pay that on your behalf when they come due. However, the vast majority of the time, these closing costs get rolled into your new loan amount. So you typically don't have to come to a refinance with money, like out of pocket, but your loan officer should show you, this is what you're paying off, here are the closing costs that are getting rolled in, and then here's your new loan amount, okay? All right. At the end of the day, there's some simple math, and I don't think that this happens enough between loan originators and the client, and so I'm going to show this to you. I do this basic math calculation, and basically, when you come and refinance, there's different reasons, right? Sometimes you just want the lower rate. I don't blame you, right? That's great. Sometimes you need to pay off that consumer debt and you need lower monthly payments coming out of your pocket. But regardless, we should always look at how long does it take to pay yourself back. So the fees that you're going to incur to do a refinance, we want to take the total cost of the refinance, those fees that we just talked about, and we want to divide that by the monthly savings in your principal and interest payment. And that will tell you how many months it takes to actually pay yourself back for the refinance. So here is some simple math. Let's say all of those closing costs were about $3,000, and you're going to save $150. We take $3,000, we divide it by 150, and that is 20. So that means after 20 months, you are truly saving $150 going forward. Up until that point, we just keep adding the 150 together, so until you actually save the $3,000 that it cost. All right, but the most important thing of everything that I've told you in this time together is that I want you to know I'm here for you, and I'm always here for you. You can call me, you can email me, you can text. All my contact information is here on my channel. You can set up time on my calendar. Don't do this alone. Don't be scared. Don't feel embarrassed. Wherever you are right now, let's have a conversation about that. And I promise to tell you the truth. If it makes sense to refinance, I'll show you how to do it and how to do it right. But if it doesn't, I will also tell you that. Okay. If you need some more information, like I said, you can book a planning call with me. Just reach out, whatever's comfortable for you, and I am happy to help. I also have a free smart home buyers guide that I've created. And if you just want to understand the home buying process in general, or maybe just kind of see a little bit more about who I am and how I share information, click on the link in the description and grab that. I will also stay in touch with you on a weekly basis. I just send out a quick email with some mortgage tips and some really cool life at home tips. And it would really be my pleasure to be able to stay in touch with you. And it would be an honor if you reached out to me in that way.